We've got your September Austin real estate market report, and we're going to dive into the stats. So let's take a look at the number of active listings, and this is for single family homes within the city limits. And you can see over time here, this has increased as we've been talking about. And we've got 2,400 homes on the market as of September 1st. So it looks like it's stabilizing. The rate that it's growing is not as aggressive as it was between June and July.
Yeah, it's really a marginal increase in the actual increase of active listings within the city of Austin, single family homes. And when we take a look at the monthly housing inventory calculation, here you take those 2,424 active listings. Over the past 12 months, we averaged just over 900 sales a month. That pace has slowed for the past 3 months, just over 800 sales a month. And then the 30 days preceding this report, just over 700 sales a month. So those three different absorption rates into the 2,400 active listings gives us a range when we're calculating the monthly housing inventory of 2.7 over the 12-month span because of that higher absorption as compared to just over 3.4, almost 3.5 months current inventory based on that 710 sale run rate. And now that next slide really puts it into perspective because you can see the progression, David, from basically when you and I started doing these market reports together, half a month inventory was standard headline news for quite some time. And here we are today at 3.4.
The important thing for people to keep an eye on, which we'll get to the barometer here in a minute, is that this rate, which you can see it was like accelerating pretty fast. It looked like we were going to go parabolic and boom, we just plateaued. So here's the number of sales, and you can see year over year transactions around 39%. What we've been seeing and talking about is somewhere in like the 75 to 80% of buyers are still out there making transactions. So sometimes if you're watching the media, it feels like nobody's buying, but the majority of transactions are still happening. But that 20% that is not out there buying is what's the difference here, which has seen the inventory go up significantly. The average price, you can see year over year, we are still up. And what I find interestingly is just before this, I was kind of seeing what other videos and people are posting about the market. And one of them was like, the housing crash is getting worse. And I'm thinking, what housing crash are they referencing? Because what we're seeing so far in Austin, at least, and I'm not looking at the whole country, is not a housing crash, which generally implies that prices are declining at a very fast pace. And here you can see, yes, month over month, they are down. But if we go back 2 months, I put out a tweet that talked about the seasonality. You could follow me at David Shapiro ATX on Twitter. So the seasonality is normal. If prices didn't go down throughout the year, is what my tweet talked about, that would be abnormal. And so we look back last year, the hottest real estate market in the history of our country, prices went down from July to August. Pretty normal. If we look back over the last 5 years, you can see that in addition to 2021, there's 2 other years. So 3 out of the last 5 years, prices have gone down. 2021, here in 2019, and then in 2017, all strong sellers markets. It was flat in 2018 and went up in 1 year in 2020. And 2020 was a weird year because remember, the market got shifted because nobody was out there looking and buying in March and April. So the entire market basically shifted down a couple months. And let's just see. Yeah, you could see there was actually a decline the following month, which makes sense. And then, it was up and then down again from October to November. So anyways, this is not abnormal to see prices fluctuate within a year.
Yeah, and the key here is not to focus on the headlines, not to focus on the next shiny thing in terms of clickbait from the media, but really just focus on the fundamentals, supply and demand. And that's our key as we roll through our analysis.
Yeah, which is a really hard thing to do. What we'd be curious to hear about from you in the comments is how you're feeling about the market. Let us know. We've been getting on there and answering nearly every question. So go ahead and tell us how you're feeling if you have a question about it, and we'll be happy to jump on there and answer it for you.
So now, David, we do see a very interesting metric that kind of addresses what we see in the media, which is softening demand. and it's days to sell. But we like to keep things in context. So current numbers, 24 days to sell. Yes, it's an 84.6% jump over last year, which was only 13 days. And yes, it's 50% more than it was last month, 16 days to sell. But 24 days to sell is still a short marketing time in the greater scheme of things, looking back over the past 20, 30, 40 years in the real estate industry. So although those numbers are going up, does it mean the market's crashing? No. It means that we're moving towards a more balanced, stable market.
Agreed, Leah. I think the anomaly here is 2021. So if you just do one of those games of which one of these is not like the others, it's very clear that 2021 at 13 days is the outlier, and we're just getting back to normal times. But it's just this reference that people have of how things were last year. It's recency bias, which we've talked about, and clearly we're just going back to what's normal. Nothing to be too concerned about at this point. The number of new listings that hit the market. So you can see we talked about what happened in June. This is when the fear rhetoric really started, 1,800 homes. But that has peaked. And now we're back to actually below where we've been in previous years. And that brings us to our supply barometer, our favorite metric for real time, keeping an eye on what's happening. For those of you that are thinking about buying or selling and trying to make a decision in the moment, this is your metric.
Yeah, so the idea with the barometer is we're taking a look at the supply-demand coverage ratio. You see the formula in the bottom left. It's how many new listings hit the market in a given week divided by the number of pending sales. And over the past 3 or 4 weeks, we've been stabilizing. Yes, the inventory is growing according to this metric, the absorption rate, but the trend is to decelerate, move towards a balance. We really had a lot of uncertainty back the end of May into June. And even though the media is fueling that uncertainty and the Fed is positioning additional rate increases, we're seeing an inventory that looks like a balanced market, and that's what these numbers are telling us.
Yeah. And I don't think the pending sales, like the last week of August going down, is going to be that abnormal. Like people are on vacation, last push before school starts. It's hot out. So my prediction is that once we get past school starting into September, into mid-October, things are going to pick up with buyers. And so we'll see if the number of new listings, where that goes and what happens with our barometer here. But certainly this definitely is a good sign for anybody transacting. I mean, I guess those people that are fear mongering and really want the market to crash 30% so they can buy, this isn't good news for them. But for the rest of us that would like to see something somewhat stable, people able to buy more homes, more options, and not a crazy seller's market, but also not a crashing market, just like a nice stable market, this is looking good.
Yeah, and I think from our perspective in the field, working with buyers, sellers, and investors every day, we've seen some pretty strong competition, David, in some of the negotiations that we've been involved with over the past week or so. Most recently, multiple offer situations on multiple $1 million properties. There's a lot of demand out there. So we believe that buy on fear is our motto. And I think that continues to ring true here in September of 2022.
Yeah, and I think the way to think about that, when you hear some of these people saying the market is crashing and then trying to go find and dig, and like we're trying to present a very balanced approach. You know, some people think we have a vested interest. Like we want to show that it's always a good time to buy. We work with buyers and sellers. So to us, you know, whether the market's crashing or the market's booming, like there's always people that need to transact. And so we just want to show what's actually happening. But go do your own research and try to figure out what's happening. And when you see a lot of this doom and gloom, FUD, fear, uncertainty, doubt, think like, is this a signal for me to buy? Because that's what's being put out there. And a lot of people are afraid and they're holding off. Baron Rothschild says the time to buy is when there's blood in the streets. Warren Buffett adopted that and said, be fearful when others are greedy and be greedy when others are fearful. And we are now adopting that and saying buy on fear, right? And that's what you got to look at is like trying to find the signal out of the noise.
When the fundamentals are sound.
From what we've been seeing going on in the market, I also wanted to dig into something a little bit special this month, which is properties over $2 million. So Lee's done a great job putting this together for us. Let's dive in and see what's happening there. So here's the monthly housing inventory. So what you can see is there's 234 active listings of single family homes in the city of Austin. And in the last 12 months, there have been 456 closed sales, which means that on average, we're selling about 38 a month. Over 3 months, it's an average of 45, and over a month, it's an average of 38. You divide this number into the 234 active listings, our monthly housing inventory over the last 12 months is 6.1. This chart's, I think, a little bit, doesn't go to zero, so keep that in mind, folks. So it may be a little bit deceiving. But basically, the inventory has hovered in this range, and it hasn't changed a whole lot.
And interestingly, 6.5 month inventory is traditionally the point at which a market is defined as being balanced. It's not a seller's market. It's not a buyer's market. It's a balanced market. I think that in this particular case, there's been a significant increase over the past several years, certainly of $2+ million homes selling. And the supply, I think, is catching up a little bit. And that's why we're seeing this 6 point plus inventory as compared to just over half that for all single family homes. So a little more of a supply.
Lee, one other thing I think might account for this is that a lot of, and it's hard to say what percentage, it's not a majority, but there is a good chunk of transactions over $2 million that are happening off the MLS. There's all sorts of pocket listings that, agents will share with each other. We're a part of some membership groups of just agents that are sharing luxury listings. And so if you take into account those listings that are selling before they're even hitting the MLS, and then the ones that don't sell as a pocket listing, they might still come on the MLS, and then they might sit because maybe the seller just wants too much for them. Or maybe there's just not enough demand for that type of property. Those types of properties have a longer time on market. So that also could be a factor that you're not seeing some of the sales that the properties that are selling quickly because they're happening off MLS. And then the ones that are sitting longer are coming onto the MLS. So here we've got the number of sales on the MLS, and you can see that year over year is down by 1, and month to month it's down 19%. What I think is really interesting to look at is if you go back 5 years to 2017, and it's kind of almost comical. We were having single digit number of $2 million plus sales the majority of the year, single digit. And now we're in the, most months we're over 40 homes in the $2 million range being sold.
So now we take a look at the average prices for homes over 2 million, and you can see some very significant jumps, both year over year, almost 30% going from 2.6 million to over 3.3 million. And then month to month as well. Oh my gosh, you talk about a untenable, unsustainable rate of appreciation, 21% a month. Wow, what a great time to buy. What we've seen so far is that the demand has been increasing, not only based on the number of sales, but also in the average prices. And
yeah, I mean, the average number of days up 14% year over year, but down 11% month to month. When you look back over the previous 5 years, the number of days on market, I mean, it is staggering how this has dropped. The amount of demand for $2 million plus homes in Austin. We're not even in the same country, Lee. We may not even be on the same planet when it comes to what's going on here.
Well, that's part of the mission of SpaceX, and we'll be talking about that in our Elon Musk report.
2017, we were hiking up some hills, more like a greenbelt trail. Now we're climbing Everest.
David, in 2017, we were playing Goonie golf. Today, we're at the Masters.
In 2017, we were just like a little infant succulent growing very so slightly. Now we're the redwood forest of markets. It's a different market than it was 5 years ago for luxury homes in Austin. That's for sure.
It's a whole nother kettle of fish. So, David, when we take a look at the number of new listings, again, homes over $2 million in the city of Austin, we're seeing a reduction, which I think is really healthy for the overall market month over month, just going from 93 new listings last month to 71 this month, but up from last year at this time. So again, a little up over the year over year, a little bit down month to month, basically showing a market that is continuing to adjust to the dynamics as we head into the fall. I think this bodes very well for price stability in this segment.
To reiterate, we do a ton of deals in this $2 million plus market, luxury, some commercial properties. A lot of this is happening off market. So if you're interested in those types of properties, go ahead down to the description, schedule a call with us, or you can just shoot us a text or an email, whatever you prefer, and we'll hop on a call, free first call, to just talk about what your goals are so we can understand if we're a good fit to help you towards those. So let's dive right into our monthly housing inventory. And the first thing you'll notice is that the number of transactions, when we talk about outside of the city, is much greater than the city itself. Half of them live in the city. The other half live in the suburbs, and it actually constitutes more of the transactions. I don't know. Find that interesting. What do you think, Lee?
No, absolutely. I mean, here we're over 7,000 active listings. What is that? About three times the size of the Austin market in terms of what's listed for sale. And the monthly housing inventory is also a bit larger, relatively speaking. Consistently, whether we're looking at the 12-month metric, where the greater market is selling over 2,100 homes a month, to the more recent numbers over the prior 30 days to putting this report together, over 1,800 sales a month. So you divide those into the 7,200 active listings, and you're looking at a monthly housing inventory of anywhere between 3.4 and 3.9 months, which is significantly higher than the monthly housing inventory we looked at for the homes inside the city limits.
So the number of sales down significantly year over year, 25%. Well, I should say that this is pretty much in alignment with what we've been seeing, which is that you can look at it as sales are down 25%, or you can look at it as 75% of buyers are still out there transacting. And I think what often people think is like, oh my gosh, the market, it's like over. Nobody's out there buying. Well, the majority of people are still out there buying. And that's what we're seeing here. But that does create an increase in inventory when a quarter of your buyers decided they're not going to buy this year. Month over month, we're down about 9%. And if you look back over the previous 5 years, going back to August of 2017, we're not that far off from that number. I think the difference between the city and the rest of the area is there's a lot of room for inventory to grow, for them to build new homes outside of the city limits. And so the number of transactions, it's not surprising that this number is going to continually go up, probably at a faster pace than we'll see it go up in the city. It's also at a lower price point, so more people can afford these areas.
David, you touch on a great point that I'd like to piggyback a little bit, which is the dynamic synergy between basically landlocked city of Austin and the expansive territory surrounding Austin, where there's plenty of room for development. We'll be talking about that in another video we're recording today on some of the huge developments coming in. That synergy, I believe, is almost a perpetual real estate development machine, where you've got the core landlocked downtown area. By virtue of being landlocked, you're going to have price appreciation as long as there's demand. There's so much inbound tech migration, that demand is not a question. But you also have the capacity to add inventory, to add infrastructure in these outlying areas where there is active real estate development on 100-acre plus, 1,000-acre sort of large-scale master plan communities that can feed into the Austin metro. And we know with the increased tolerance for lengthy commutes, the work from home trend that continues to grow. My point is that Austin, I don't know if it's unique per se, but it's certainly a rare dynamic where you've got a landlocked core that's a strong inbound magnet with a periphery that will accommodate additional growth. That's a beautiful formula for sustained growth in our metro area.
Average price up year over year, 11%. So no crash imminent here, like even though inventory is going up, prices are still stable, if not increasing. You can see month over month they went up. Generally, we'll see seasonality.
So, David, days to sell. Oh my gosh, headline news. Year over year, it's up almost 87%, 86%. Oh no. Last month, it's over 30% higher. The sky is falling. Oh, wait a minute. 26 days to sell. That's still pretty quick, David. So, when you're comparing numbers to historically crazy market conditions, yeah, you're going to see some dramatic changes. But what does it really mean? And that's what we're here for. It means you still got a pretty darn strong market based on 26 days to sell.
Yeah, if you look back to 2019, 2018, those were strong sellers markets. I mean, we're still have a ways to go to get back to 59 days to sell. So, I mean, we're still in a healthy market, seller's market. So it's not even a buyer's market yet. So all this talk about a crash is just to get you going and fearful, and watch more of those people's videos and listen to more of their stuff and click on their articles. So keep that in mind. None of that is actually happening.
And again, in Austin. So we have an audience that's around, across the country and around the world. And clearly there are markets where there's trouble. Not here in Austin, though. And that's what we're trying to demonstrate today.
Number of new listings, pretty close to flat. You can see when you look back over previous years, this feels like a lot of new listings. I talked briefly about that's just a natural progression outside of Austin, that there's going to be more listings. And it's probably a little bit more than it would have been without rates going up. If you look over, well, even last year, I mean, it's not really that many more than last year. So pretty interesting.
Just more stability. You're going to have some ebb. You're going to have some flow. This looks like normal market movement.
I'm David Shapiro, local Austin real estate developer and investor and broker, and Lee Abraham, also a realtor. We work together to help people buy and sell in the Austin area. So if you're thinking about buying or selling, go down in the description. We have a link to schedule a call with us. And don't hesitate to comment with any questions that you have. Go ahead and subscribe. We're posting videos every week to keep you updated on what's going on in the Austin market.
Thanks, everybody.